Are you ready for a big change that could directly affect your wallet in 2025? The IRS has just released the updated tax brackets for 2025, and this move carries a huge impact on retirees, Social Security beneficiaries, and millions of hardworking Americans. Whether you're living on retirement savings, collecting Social Security, or planning your next year's budget, these updates could determine how much you keep and how much you pay back to the government. But here's the catch. Most people don't realize just how much of a difference these new brackets can make until it's too late. Don't worry, we'll break it down for you in simple terms so you know exactly what to expect and how to prepare. Before we dive into these massive changes, make sure you hit that subscribe button and ring the notification bell. Let's talk about what's really happening with these new tax brackets, and more importantly, what it means for your retirement savings. You know, it's funny, when I first saw these updates, I couldn't help but think about my own parents who are approaching retirement. They had this whole plan mapped out. But now? Well, let's just say we had to sit down and have a serious conversation about adjusting their strategy. But before we get into the nitty-gritty, let me ask you something. Have you ever wondered why the IRS keeps adjusting these tax brackets? I mean, it seems like every year there's some new change we have to wrap our heads around. Well, there's actually a fascinating reason behind it, and it all ties back to something called inflation adjustment. You see, the IRS isn't just making these changes to make our lives more complicated, though sometimes it feels that way, doesn't it? They're actually trying to prevent something called bracket creep. Imagine getting a raise that's just keeping pace with inflation, but suddenly finding yourself in a higher tax bracket, even though your purchasing power hasn't actually increased. Pretty unfair, right? Now, here's where things get interesting for 2025. The IRS has made some of the most significant adjustments we've seen in years, and it's all because of the unusual economic conditions we've been experiencing. Remember all that talk about inflation over the past few years? Well, this is where the rubber meets the road. Let me paint a picture for you. Let's say you're a retired couple who's been carefully planning your withdrawals from your retirement accounts. You've got it all figured out, how much to take from your 401k, when to tap into your Social Security, maybe even some rental income from that investment property you bought years ago. But these new brackets, they're going to change the math on all of that. The most dramatic changes are happening in the middle brackets, and this is where most retirees find themselves. Think about it. You've got your retirement savings, maybe a pension, Social Security benefits, and possibly some investment income. All of these sources of income add up, and where they land in these new brackets could mean the difference between having enough for that dream vacation or having to tighten your belt. But here's something that might surprise you. Some retirees are actually going to benefit from these changes. Want to know if you're one of them? Well, it all depends on how your retirement income is structured and which tax brackets you fall into. Let's talk about those brackets for a minute. The new standard deduction is increasing significantly, which is good news for many retirees who take the standard deduction rather than itemizing. But here's the catch. If you're receiving Social Security benefits and have other sources of income, these changes could affect how much of your Social Security becomes taxable. I remember talking to a client recently, let's call her Mary. She was all set to retire in 2025, had her numbers worked out perfectly based on the old tax brackets. When I showed her how these new brackets would affect her plans, she was shocked. But here's the thing. Once we adjusted her withdrawal strategy and timing, we actually found ways to save her money under the new system. This brings up an important question. How flexible is your retirement income strategy? Because if there's one thing these changes are teaching us, it's that flexibility in retirement planning isn't just nice to have, it's essential. Now, let's talk about something that's not getting enough attention: the impact on required minimum distributions, RMDs. If you're approaching 73 or already taking RMDs, these new brackets could change how much tax you're paying on those mandatory withdrawals. And let's be honest, nobody wants to pay more taxes than they have to, especially in retirement. Here's a scenario that might sound familiar. You've done everything right: maxed out your 401k contributions during your working years, diversified your investments, maybe even converted some money to Roth accounts. But now these new brackets come along, and suddenly your careful tax planning needs a second look. But don't panic. There are strategies you can use to make these new brackets work in your favor. One of the most powerful is tax bracket management. This means carefully controlling your taxable income to stay within certain brackets. It's like playing chess with the IRS. You need to think several moves ahead. Let me share a strategy that's working really well for some of my clients. It involves looking at your retirement income sources as different levers you can pull. Some you have control over, like when and how much you withdraw from your retirement accounts. Others are fixed, like pension payments. By understanding how these new brackets work, you can pull these levers in the right order to minimize your tax burden. Speaking of control, let's talk about Roth conversions. These new brackets might actually create some interesting opportunities for Roth conversions in 2025. If you've been sitting on the fence about converting some of your traditional IRA money to a Roth, these changes might make it more attractive, or less, depending on your situation. Here's something else to consider: the impact on Social Security claiming strategies. The age at which you start taking Social Security benefits has always been an important decision, but these new tax brackets add another layer to that decision. Why? Because the way Social Security benefits are taxed depends on your other income, and these new brackets could change that calculation. I've been getting a lot of questions about state taxes too. Remember, these are federal tax bracket changes, but your state tax situation might be different. Some states are really friendly to retirees, while others, not so much. It's like putting together a puzzle. You need to see how both the federal and state pieces fit together. Let's talk about something that often gets overlooked: the impact on investment decisions. These new brackets might change how you think about things like dividend-paying stocks versus growth stocks, municipal bonds versus corporate bonds, or even real estate investments. It's not just about what you earn, it's about what you keep after taxes. This reminds me of another client. Let's call him Bob. He was heavily invested in dividend-paying stocks, thinking they were the perfect retirement income source. But under the new brackets, we found that a different investment mix might actually leave him with more after-tax income. It's these kinds of adjustments that can make a real difference in retirement. Now, you might be wondering about the long-term implications of these changes. That's a great question, and it's one that deserves careful consideration. While these brackets are set for 2025, we know that tax laws are always evolving. The key is to build enough flexibility into your retirement plan to adapt to whatever changes come along. Let's address another important question. What about inflation? These new brackets are adjusted for inflation, but what about your retirement income? Does it have built-in inflation protection? This is crucial because while the brackets might adjust year to year, not all retirement income sources keep pace with inflation. Here's something that might surprise you. These new brackets could affect your Medicare premiums. That's right, because Medicare premiums are based on your income, and these new brackets could change your reportable income. You might see changes in your Medicare costs. It's like a domino effect. One change leads to another. But let's get practical for a moment. What steps should you be taking right now to prepare for these changes? First, you need to understand exactly where your retirement income will fall under the new brackets. This means gathering all your income sources and doing some careful calculations. Think about your retirement accounts, Social Security benefits, pension payments, rental income, dividends, everything that contributes to your taxable income. Then, look at how these various income sources will be taxed under the new brackets. This is where things get interesting because you might find opportunities to restructure your income in ways that save you money. Consider this. Could you benefit from accelerating some income into 2024 or pushing some into 2025? These kinds of timing decisions can make a big difference in your overall tax situation. It's like having a time machine for your money. If you know what's coming, you can position yourself to take advantage of it. Let's talk about something that often gets overlooked: the psychological impact of these changes. Many retirees feel anxiety about running out of money, and changes to tax brackets can add to that stress. But here's the thing: understanding these changes and having a plan to deal with them can actually help reduce that anxiety. Remember, these changes don't just affect your tax bill. They can impact your entire retirement lifestyle. The amount of money you have available for travel, hobbies, helping family members, or whatever else you want to do in retirement could change based on how these new brackets affect your after-tax income. Now, let's discuss something really important: the role of professional advice. While it's great to understand these changes yourself, the complexity of tax law means that working with a qualified tax professional or financial advisor might be more important than ever. They can help you see opportunities and pitfalls that might not be obvious at first glance. Here's an interesting question to consider: how do these changes affect your legacy planning? If you're planning to leave money to children or grandchildren, these new brackets might influence how you structure your estate. It's not just about your own tax situation, it's about creating the most efficient way to transfer wealth to the next generation. Let's talk about emergency funds too. With these new brackets, the amount you need to keep in easily accessible accounts might change. Why? Because if you need to take an unexpected withdrawal from a retirement account, the tax implications could be different under the new brackets. This brings us to an important point about diversification, not just of investments, but of tax treatment. Having money in accounts with different tax treatment, traditional, Roth, taxable, gives you more flexibility in managing your tax situation under these new brackets. Now, here's something that might make you smile. There are actually some hidden opportunities in these changes. For some retirees, these new brackets might create windows for tax-saving strategies that weren't as attractive before. It's like finding money in the pocket of an old coat. Sometimes, changes can bring unexpected benefits. But let's be realistic. Not everyone will benefit from these changes. Some retirees might need to make significant adjustments to their retirement income strategy. The key is to understand where you stand and what options you have available. As we wrap up this discussion, I want to emphasize something crucial: the importance of staying informed and being proactive. Tax laws will continue to change, and the most successful retirees will be those who stay educated and adaptable. If you found this information helpful, don't forget to like this video and share it with anyone you know who's planning for retirement. Drop a comment below with your thoughts on these new tax brackets. I'd love to hear your perspective. And remember, retirement planning is a journey, not a destination. Stay informed, stay prepared, and most importantly, stay engaged with your financial future. See you in the next video.